Hi, good evening to all. And I am extremely grateful with Michael Steinbach that we have still such a big audience for the very last keynote of today. And we are really extremely pleased to be in front of you because I am Gilles Grapinet, CEO of Worldline, and I have the pleasure to share this keynote with Michael, who is the CEO of Equens, and for a very good reason. Actually, we are merging our two companies within the Worldline group to actually cope with these structural changes of our payment industry in Europe. For those who are maybe not familiar with our two companies, a few reminders. Worldline is one of the largest, if not the largest, payment services providers in Europe. It has been listed in 2014. It is a company delivering 1.2 billion euros of revenues last year and having roughly 7,300 people operating in 17 countries, 90% of them being in Europe. Equens, which is led by Michael for years, is a company having 1,300 people worldwide and particularly strong in the north of Europe with 315 million euros of revenue. Both companies are extraordinarily complementary. Worldline was extremely strong in card processing, mobile, online payments, merchant services, while Equens is a very recognized processor for mass payment, ACH services, and of course some card processing activities. We're going to combine these two companies. It will create within the Worldline group a much larger group. We will be roughly 1.5 billion euros. We will get 8,600 people, of course, at the closing, which is planned for Q2, now in 2 months' time. And in the middle of the Worldline group, you will have the Equens Worldline company that will be led by Michael Steinbach as the CEO of our joint operation to deliver financial processing services to the banking community all across Europe and hopefully beyond. Let me start, because the point is to share with you what drove us to make this major transaction, which is considered as of today as the largest announcement over the last years in the European payment processing industry. And as far as we see, as of today, probably the largest one that will be executed in 2016. Actually, I wanted to share with you the rationale for that. Michael will come back on the many benefits we want to bring to our stakeholders in the European payment industry, primarily the banks, but their customers, the merchants, so this combination. And also to share with you some thoughts about what is waiting us, what is the way forward after this first transaction, and probably many others to come. And I would like to start maybe by a remark. We are more than 10 years after the SEPA adoption. And actually, maybe many of you still remember that 10 years ago, we were thinking that the industry, the processing industry in Europe, should have been much more consolidated by now. Actually, maybe you remind that the implementation of SEPA should have been a story executed in 2-3 years, and on the back of this standardization, we were expecting the number of ACH in Europe to come from 30 or circa 30 down to 3 to 5 key processors, and even it should be transferred to the level of the banks themselves, particularly for their back office card processing activities that should also be consolidated. Actually, as I am speaking, there are still more than 20 ACH in Europe. And most industry experts do consider that still 50% of the back-end processing of card business is still done in-house by many banks in Europe. So the consolidation has not really happened so far. Actually, it reminds me that probably this industry has been caught in a type of Beckett syndrome. So I guess that as I am pronouncing these words, you are probably scratching your heads, wondering, who is this Beckett? Is it a new payment regulator that we were not identifying, or is it a new payment norm? Actually, I was referring much more to Samuel Beckett, the fantastic author, which is the author of a very famous theater play, which maybe you remind, called Waiting for Godot. In Waiting for Godot, there are two characters, Estragon and Vladimir, who wait endlessly and in vain for the arrival of someone named Godot. And of course, this is a symbol of what we've been waiting in many other domains, and there has been a lot of interpretation about the display and the Godot's absence. So let me give a try to share with you who could be Godot in the context of the European payment industry. Actually, our European payment industry is still waiting for its Godot. And I think that the time of waiting is over. Godot in the context was the pan-European consolidation of the processors. We do believe with Michael that this time of waiting for something that has been announced, expected, analyzed, even calculated, is over. And there are many reasons for that. But if we want to understand why it has started really in Europe, while we will be having a fantastically changing landscape for the processing business, we have also to understand why didn't it happen sooner? Why were we fooling ourselves as professionals? Why there is such a strong and compelling industrial rationale to combine businesses in a scale business, and it did not happen. I think talking with many of you, banks, regulators, merchants, specialists, consultants, I think we came with the same vision with Michael, that there are a number of reasons. The first one is, I would say, technical. I mean, the implementation of SEPA has been much more complex than it was foreseen, technically, legally, and even more costly. On top of that, business reasons are certainly not the less important. In all fairness, the first era of SEPA standardization was not touching the business models. And so the pricing model, the interchange, the way we were billing customers for payment services was not impacted by this first wave. So why changing? Why getting out of the comfort zone if the economics were still there? And third, of course, it is why I decided to have this picture here. It is the big worldwide crisis of 27 on the back of the subprime crisis, which has just taken all the available bandwidth of the bank CEO to actually revisit the arbitrage in their operation. It was a time of survival. Governments were actually salvaging banks. And of course, priority was the balance sheet and less the P&L, at least for a few years. And it tells me that we were 10 years ago in this situation that Bill Gates is actually describing here, which was indeed, people often overestimate what will happen in the next 2 years and underestimate what will happen in 10. And I really do believe that we are exactly in that situation, and we were in that situation 10 years ago. The level of change that will happen now in the European processing industry will be 3 times bigger than we foresaw 10 years ago. Why so? Because just our industry is facing a tsunami of changes. All the reason not to move of the past 10 years have faded away. And there are so many compelling reasons to make that combination of operations in processing happening. The regulation has been moving fast forward, and now the regulation has been totally changing the business models. Then the business reality is there. There are probably merchants in this room, big merchants. They do cross-border tendering for their processing needs. The SEPA is a reality. We process volumes that are actually coming from all countries in Europe, both Equens and Worldline. And scale matters. Our payment industry is definitely a business in which small is not beautiful. And for sure, when the business is driving you, is a driving force, things happen. The investment cycle, I mean, just look at what we've been experiencing over the last 3 days here in Money20. The level of investment our European payment industry is facing is unprecedented. At the same time, we need to deliver instant payment for non-card payments. We need to deliver mobile payment solution. We need to create added value services for the merchants. We need to improve the online banking systems. We need to improve the online payment systems. We need to have better fraud management services. We need to implement data analytics solutions to extract the value of payment data. And if we were to do these investments in parallel in dozens of subcritical platforms, it would be a recipe for waste of resources, human and financial and technical. And so in front of this tsunami of changes, scale matters to innovate also. It is not only to decrease the cost. It is to have the European size for pushing value-creative innovation in this industry. And of course, to allow a consolidation to happen, it's not only good to have good business reasons. It is also important to have buyers, sellers, and attractive valuation. We have buyers. Worldline has been listed and is having a very strong balance sheet, precisely to be an active consolidator in this industry. We have sellers. More and more transactions are happening. Banks realize that these assets need to be consolidated, and they are not always the right shareholders to allow that to happen, because it is more and more technology-driven. And last, the valuations are extraordinarily compelling. So we have business reasons, we have financial reasons to create this consolidation, but we have, more importantly, extraordinarily compelling benefits for all the stakeholders of this industry, banks, merchants, and their customers. And it is exactly what Michael will explain to you, so what he wants to bring to this industry through the Equens Worldline company. Thank you, my friend.
Thank you, Gilles. Thank you, Gilles. Good evening. I think it's already time to say good evening, ladies and gentlemen. Happy and a pleasure to be here and to share with you the ambition which the consolidation Gilles just introduced will be not only for the new Equens Worldline company, but for the industry in total. And it's clearly, from our point of view, the Equens Worldline company, our ambition, especially with this company, is that this consolidation benefits fully to the banking ecosystem. Before I give you some examples on what this consolidation will bring on advantages to the banking industry and the financial industry in total, let me briefly introduce you the new company upcoming with the Equens Worldline company and share some major figures so that you also know what we are talking about. So the combination of the two, which is actually Equens born out of the traditional banking world with banking shareholders, and a combination and a collaboration with a fintech-listed commercial company, Worldline, I think is, from our point of view, a proxy for what you will see in the near future in this consolidating market. So 100 million predominantly debit cards under management. We have more than 250 banking clients across Europe, 10 billion payments, 6 billion POS, ATM, so card-related business, a revenue roughly 680 million, and a pool of experts since a lot of years, which we have roughly 3,000 here in this new company. Now, let me give you our view on this consolidation and how banks will benefit from it. As I said, and Equens Worldline is definitely, and that's our ambition, a proxy to that. So based on the consolidation, the size and the consolidated transaction volume will bring benefits to the banks, because still size matters. And especially in the SEPA area, this game has already started quite some years ago. And individual banks are not able on their own to get to transaction volumes which enables them on a sustainable, continuing basis to lower their cost, to keep the cost on such a low level, to stay competitive, and at the same time to follow also the market developments. Of course, as you know, core payment processing, back office processing is a commodity, is not a differentiating factor. Consumers, merchants, clients expect that it works efficiently, secure, and of course also with less costs involved. So based on these developments, we see that already since quite some time, but in an increasing way of number of examples, banks reconsider their operating models more and more. Also thinking about sourcing parts of their back office or the complete back office, and with that, of course, also freeing up resources within their banks, which they can use for the more differentiating part in banking business, which is taking time, taking care of new innovations, new business models, and with that also contributing to the positive development of the balance sheet. Secondly, this consolidation will enable banks to take, use, and offer new opportunities and new technologies. Let me give you 2-3 examples out of the Equens Worldline environment. Instant payments, a very prominent theme across Europe, across the globe even. So, and in instant payment, we are offering, and our developments are going according to the whole value chain within a bank, starting from initiating a payment over the bank internal processing up to the clearing and settlement. And this service will be added and enriched by a white label mobile app where you can initiate also payments via mobile phone numbers using alias conversion. So it's really a real end-to-end solution. White label solution can be then also customized to the needs of the particular bank in their respective market. Other example, mobile payments. All of you, or most of you, are in that business. So do we. As Equens, we are in a lot of initiatives, in a lot of processing of this type of business in multiple countries. So, and we are there in either already running or on the way to develop or to the way to roll out solutions like mobile app solutions with personal finance manager functions, with HCE mobile payment services, or even with a tokenization OEM payment services, for instance, for Apple Pay and Samsung Pay, which we offer in the market. Or thirdly, we are processing, especially also in the Netherlands, and supporting there the bank and the government in processing digital identities, e-mandates, of course, to name some of them. We do that in a way that we develop these solutions by our own, and we have sufficient development resources in this combination of Equens Worldline. And with that, the benefit is that we can, of course, develop solutions when they are needed, and we do not need to wait for release timelines and so on. And we can, of course, also take care of the still existing, and from our point of view, it will also last to exist, country-specific or local individual solutions, requirements, and so on. Because also in the payments area, although we have this global activities, one size does not fit all. Lastly, the consolidation will enable banks to size the existing European growth potential. Today, banks are in a kind of dilemma or in conflicting situations where, on the one hand, they have the demands, the increasing demands of their clients, consumers, merchants, and so on, which they have to follow. On the other hand, the since years discussed challenges in following up regulatory requirements, but of course also more and more new entrants in the market, like the fintech companies, and a lot are here in that room and outside. And of course, you can also take this as a competition, but our belief also there, and I think also there, Equens and Worldline is a proxy, a good proxy of the future is, it's about also here collaboration and cooperation. So that, of course, you have to change your business models, your strategies, but we firmly believe that this has to be done, that this will be done, and we as Equens Worldline will go this way. Summing up, what is the value, what the consolidation will bring to the banking industry, to the financial industry, is lowering costs due to and based on the size, the efficiency, and of course also major central investment firepower also for the upcoming requirements. Increase revenue opportunities through new solutions, and last but not least, of course, beside the freed up resources, very important and a major issue in the banking industry, faster time to market. Thank you very much for your attention, and I would like to hand over to Gilles again to round it up.
Thank you, Michael. And thank you for this fantastic illustration of, yes, the many benefits that this combination wants to bring, but beyond, you have understood, beyond our combination, we do believe that it is what the consolidation of the industry will bring to all the participants. I would like to conclude by a couple of remarks regarding the way forward. I mean, we've been discussing in this keynote why the consolidation did not happen until now, why it has started, and I think this transaction, this combination, this industrial project we are developing with Michael is just a proof point of that. We've been discussing what are the benefits that all participants will receive from this operation, and I guess from other ones that are going to take place in the years to come. Now remains probably two questions. Where do we go? What could be the end game of the consolidation of the European payment processing industry? And I think from that standpoint, let's look at that. And I think the US is a fantastic benchmark of what we have to do in Europe, us European banks, European processors, European fintech. The US are having one currency, the dollar, for 2 centuries. In the US, the payment regulation has been established over the last 25 years. And as a consequence of one currency and one common regulation playing at the size of a continent, companies of the size of First Data, Global Payments, TC, 3 times, 4 times, 5 times bigger than the European largest ones have been created by consolidation, bringing the cost of processing in the US to extremely low points. We have one currency since 15 years, the euro. We have at last the regulation with the interchange that has been adopted just end of December 15. We have the continent, the currency, the regulation. You draw the line, and we will have also a few companies, 3, 4, 5 maybe, maximum, that will process the euro at the size of this continent for the benefits of everyone, governments, banks, merchants, and consumers. And the point is the end game for us boss, and our shareholders is extremely clear. It has started. It is like a toboggan now. Nobody will stop that. The industrial rationale is just so compelling, so powerful, but more importantly, it is what everyone actually wants, from the regulators to the banks and to the industrial companies. The last question is how it will happen. And, you know, it is one continent, but it is about Europe, after all, a very complex continent, a multicultural continent that 15 years ago was still having 22 currencies. And our conviction is that it has to happen, but it cannot be, as Michael said, a one-size-fits-all approach for every country. And our commitment in this journey that we start with Michael is to bring the industrial scale of Europe and of the euro to all participants, but paying in doing these transactions and future combination the utmost attention to the local specificities, to the regional cultures, and to the tailor-made governance that any bank or any banking community may require prior joining our company. It's what we do in this transaction. It's why the Equens banks are co-shareholders of the joint company, at least for a while. And it's what we commit to bring to our continent to make sure that we will be able to bring the industrial dimension of the euro and of processing euro at the point it should be, while still bringing vibrant innovation in these times of digital transformation. We thank you all. I would like to say a big congratulations to Money20. I think, guys, you've been making a great pick in choosing to establish Money20 in Europe. It is definitely in Europe that big things will be happening in the coming years, and we will have many things to talk about, I'm sure, in the next editions. Thank you.
Thank you.